Okay, so we'll talk about the decision. We'll talk about the market reaction. But first, on the sound that we just played from Jay Powell, just the idea that he will stay at the central bank until after the Justice Department's investigation is complete. That was some of the biggest news that we heard today.
Or was it, in your view?
No, I think it was the clarity. It was something that was hanging over the market. But I think the insider view was that he would stay on because he cares about the institution. But the pointedness and the clarity in which he made that statement was somewhat surprising. So I do think that was a big market mover today. Instead of lower for longer, it's Powell for longer, and that's what the market's trading on.
I like that, Powell for longer. Carol, I
do too.
I love
T-shirts and hats being made.
I love when he was like, I know you guys are going to ask about this.
Yeah.
Here's what I have to say, and that's all I'm going to say on the matter.
But what's interesting is he actually did say something. A lot of times he's like, folks, we're here to talk, basic stuff. Like, we're here to talk about the economy and rates. And he went for it.
It's great, right? Clear speaking out of a Fed chair, I think, is maybe a trend.
Greg, why are we, though? I'm looking at what's happened in terms of the trade. We're pretty much hovering near our lows. We've seen stocks certainly sell off rather dramatically. S&P was off about 40 right after the decision. We're now off about 87 points, down 1.3%. Let's talk to your world in terms of what we see in the fixed income and treasury trade. I'm looking at a 10-year with a yield of 4.25. It was about 4.21 right after the decision. Shorter end, 3.76. We're at about 3.70. So we've definitely seen a change in the yields. Why is it? Is it because specifically what Fed said about maybe the potential for energy prices and the push on inflation, or what?
I think it was a twofold.
Okay.
The Powell announcement definitely had an impact. So that is, Powell for longer is higher rates, right? That is the perception, rightly or wrongly, from the marketplace. And the second was on what he basically said, he's not overly worried about the labor market, which is means that he can keep rates higher, and watching inflation, which is basically, once again, code for keeping rates higher. So I think the interpretation from the market was just exactly that. Rates are higher, and it's being priced in the front end, as you see, and the curve is actually modestly flattening, not steepening. Otherwise, it'd be a big steeper.
As Carol and I huddled after his press conference and before the program, we both pointed out the tariffs making sort of a big presence in the speech today, and the press conference today too, and in his answers today. Were you surprised about his commentary regarding tariffs? That
goods inflation, right? Should we be worried about still?
I thought the impact had hit, and I think a lot of economists thought the impact had hit, and it was, I'm not going to say transitory, but it's like it wasn't as big as people thought it would be.
Well, if you look back in 2025, the biggest mistake that market players and economists made was thinking it would be a one-time hit.
Yeah.
And what we learned is that it's a kind of a continuous kind of hit, right? It's not a one-time shock. It just leaks out over time. And I still think that's in the system. So the way we think about it, the way I think about it, is that goods inflation is still coming through the system. For example, at the end of last year, or just in the course of talking to over 1,000 companies last year, they basically all told us the same thing, which is they haven't moved prices up yet, but we will do so in the first half of 2026. So I think he's reflecting that reality, honestly.
Well, I keep thinking about, you know me, I'm kind of obsessed with earnings reports, but I do think about, C-suite commentary and what we hear from them. Mind you, it'll be, obviously the last quarter, but it'll also be the outlook and whether or not they are saying they're feeling pressures, whether it's on margins and so on and so forth. And so what do they do to compensate for that?
Well, I think you see that in the labor market, right? So you're not seeing a shedding of jobs in labor, but you have this incredibly stagnant labor market. So you could blame AI, you could blame on protecting margins, I'm not really sure, but that is a kind of a reflexive response from corporations, right? So they'll defend margins, they'll raise prices, and they'll kind of keep labor flat, and that's what you see.
Yeah.
What does AI do to the economy? He's asked about this every time.
Yeah, he is.
And I think his answer, again, it's sort of like, it's kind of the question that I would ask him if I had a chance to sit down with him in the cameras Warren on. He said you can't really make a call at this point about whether Gen AI will lead to lower inflation, but over the long term, it's possible it expands U.S. output and productivity. What's your view on it?
My view comports with his. A lot of investors think it's just immediate kind of disinflationary effect. The way he described it, and which I agree with, is that the spend and the draw on resources that you're seeing today is actually inflationary. So it's a two-step process.
Yeah, I mean, those things cost a lot of money and the demand is high.
Right.
Exactly. Think about like trying to get an electrician as an example, right? So
we just did this past week.
And I bet you paid more for it. So,
always a joy.
So it's inflationary over the near term. Over time, the expectation is that it is disinflationary, but we have to ride the wave, and it's hard to make that timing assessment.
Jay Powell did well.
I thought he did, actually. This was supposed to be a complete non-event in a way, right? I mean, we were talking at a risk meeting this morning, and this is the first time that we can recall in years and years that like the Fed meeting wasn't even like a topic of conversation, right? And now it's a topic of conversation. So I actually think it was a pretty good meeting.
Yeah.
What I liked his directness, and the markets less so clearly. But I think the markets are somewhat in kind of fantasy land here as well. So it's kind of a eye-opening type of environment.